So good morning, everybody, and thank you for joining us this morning for our DMAR Connect. We're excited to have you all here this early. Before we get started, I just want you to know our industry partners are so valuable to us here at DMAR, and we couldn't do a lot of the things that we do here, a lot of the work that we do without our industry partners. So today I wanted to welcome a couple of them. Excuse me.
Go to your AirPod.
Someone's trying to steal my spotlight. I just want to, sorry. So I want to thank and introduce Greg Mattern with Finance of America Mortgage, one of our great industry partners, to tell you a few words about what he does.
Good morning, and thanks, DMAR, for allowing me to speak today as a spotlight presenter. Also, I wanted to wish all the fathers out there a happy Father's Day in advance for this weekend. I'm going to talk about two things today. So first off, I want to hit on recruiting. As many of us lending agencies out there, I'm always looking for loan officers that are interested in exploring new options at our Cherry Creek branch that we opened about 6 months ago. So if you know anybody, send them my way. As far as products we offer, I wanted to just focus on a few. So we do the normal purchase and refinance, VA, USDA, conventional, that kind of stuff. But what I want to focus today on is on a few of the other products that not all of the lending agencies have. We have some non-QM options within our umbrella. Those are internal programs that we have. We have a 12-month and a 24-month bank statement. We have a P&L, one-year P&L, and we have a one-year 1099. So if you know anybody that's self-employed that likes to write off a bunch of stuff on their tax returns, send them my way. We can get them pre-qualified to make a purchase. We also have a purchase and a standalone HELOC. We do reverse mortgages. We have a very robust renovation program. So a lot of those, with inventory low and rates going higher, a lot of people exploring, maybe I'll stay in my house that I have right now and I'll make some upgrades. I'll add some cabinets, put some new countertops, all that kind of stuff in. So we can do that. And then lastly, we have a commercial line that people that do fix and flip properties can get pre-qualified up to a $10 million line of credit, so they can draw from it, do their investments, do their fix-ups, and then sell it and that kind of thing, or flip it over to a conforming loan and that kind of thing. So I'll finish with my tagline: if you need a loan, don't feel alone. Call Greg Mattern with Finance of America.
Awesome, Greg. Thank you so much, and thanks for supporting DMAR and our events here. Next, I would like to introduce one of our annual partners, Chase, and with Chase is Matthew Hay, Senior Home Lending Advisor. Good morning.
Morning. Thanks, Julie. Thanks for having me, guys. I'll keep it short. I don't have a tagline, Greg, although I'm already thinking of one now. A couple things I want to talk with you guys about. I think you all know who Chase is, and we kind of know what's going on in the market. And when rates and waters are rough, you want to be with a big ship. There's no bigger ship than Chase. If you're an experienced real estate agent, you've been in the market for at least 2 years, and you've closed at least 20 deals, shoot me an email. I want to talk to you about something called Chase Agent Express. It's a way to get introduced to buy and sell side leads directly from Chase. We're in a market where we have a lot of people moving in from out of state, so you're going to get a lot of those relocation leads. And then finally, big thing that we're pitching right now and that we're executing on at a very high level is our Chase Purchase Closing Guarantee. So we guarantee a 21-day close, or we will pay your buyer $5,000. We're putting our money where our mouth is. I have not paid out any of them personally, and hopefully we will not be paying many of those out over the next year or two. Anything that we can do to be competitive, we will. We've also got a $2,500 Chase Home Buyer Grant all across Denver and in the greater Denver area, as well as in the mountains. If you want to learn a little bit more about it, I'll put all my contact details in the chat. Thank you very much for the opportunity to speak, and looking forward to the presentation.
Awesome, Matthew. Thank you so much for joining us, and thanks to you and Chase for supporting our work. And I'm going to ask that, hey, Greg, will you put your contact information in the chat, and you as well, Matthew, so that if people want to reach out, they have a way to do that. All right, and now moving on to our program for today. Hopefully most of you, if not all of you, know about our dynamic duo here, Scott Peterson and Damian Cox. If you don't, you should, and you will after today. These two are a staple for us here at DMAR and are all knowing with everything with what's going on in the real estate world and the legal aspects there. So I would like to welcome Scott and Damian, and I'm also going to welcome Nobu Hata, our fearless DMAR CEO, who's going to be helping with today's presentation. So good morning, gentlemen.
Good morning.
Good morning, Julie. Welcome to Nobu's Hand. Thank you for that that introduction. That sets a high bar here for Damian. I'm not sure he can stand up to it.
Now, I probably will have some difficulties.
Well, thanks, Julie, for arranging this and for inviting us to do this potpourri session for DMAR Connect. It's always fun to engage with you guys and your members, and I know Damian enjoys it as well. So, nobody, you want to push that next slide forward? So, for those of you who don't know what potpourri is, there it is. That's potpourri. It's a mixed dried flowers.
Where did you get this from, like the 80s or something?
No, that's from my from my grandmother's dining room table. I took that photo myself.
I see.
And so anyhow, it's just kind of a mixture of different things, an assortment of things, and this is kind of an assortment of things to talk about. Push it forward one more, Nobu. Now this is Colorado potpourri, and kind of less of an assortment, but I guess it looks pretty good to me.
It's just as good on a dining room table.
Yeah, that was not on my grandmother's dining room table.
It smells a little different.
That was on my kid's bedroom desk. That was a joke, by the way. All right, one more forward, Nobu, and we'll get to the serious content. So just to kind of introduce how we typically do this, and Damian and I enjoy doing this particular program together because it's meant to be kind of a collaborative dialogue, not just between us, but hopefully between you guys as well, and you guys are able to get some questions answered about some things that we're both seeing in the marketplace, and literally anything else that you guys would care to talk about. So we're not confined to the topics that are on the screen at all. We are going to offer those as some things that we would be happy to discuss. As I look at this, it's funny.
Hello, this is Amy with Medical Services. You were recently recommended by a medical professional to receive an emergency medical alert.
Sorry.
We're getting some intervention here from medical support services in the building.
1 in 3
What
Americans
is this?
over the age of 65.
I have no idea.
Are you over 65? Do you need help medically?
Don't be a statistic.
Give us just a second. We're getting, I think, a telemarketing call that's coming through the entire building somehow right now.
Press 9 to opt out.
We'd like to opt out, please.
Somebody press 9. All right. Hopefully they hang up and this goes away. I don't know what's going on, but it's not like on our whole building intercom system. There it goes. Sorry, guys, technical difficulties. Anyhow,
this is why Nobu should not be in charge of tech. This is why
There you
Nobu should
go.
not be in charge of tech.
there you go. Anyhow, so this is just kind of a cross section of topics to talk about. As I look at this thing, where I was going before we got our phone call, is that even over the last couple of weeks, you guys who are on the front lines of real estate have seen some of these things are cooling off quite a bit, and some of these topics are cooling off quite a bit. And so, as there's other things that you guys want to toss out there for discussion as we're going through this morning, please raise your hand or put something in the chat box. I think Nobu and Julie will be monitoring the chat, and let's try and have a bit of a dialogue. So I don't know, you want to come up with a topic? Is there anything in the chat, Julie? Nobu's gone now. So is there anything in the chat that somebody says, I'm dying to hear about FHA VA appraisal gaps, or
we could start with position
Not yet.
statements because we didn't put
There's
that on.
nothing
not
there
there?
yet.
All right. Well, how about this? We're going to come off of the slide and we're going to start with breaking news from the Division of Real Estate, which is super exciting for everybody, I'm sure. You guys all who are licensed brokers should have received within the last couple of weeks a couple of updates from the division related to a significant set of revisions to the real estate commission position statement. And they have gone from 46 total position statements to 29, and some really good substantive changes, as well as some good cleanup and incorporation. Damian, you want to talk a little bit about what some of those include?
Yeah, I mean, frankly, a lot of them are just kind of a redo of what they had before. Originally, those commission position statements, I don't think they've been touched in 50 years. Some of them obviously were added, they were new, but then some of the old ones were very old. So they got retired, and they did a lot of updating of those position statements to try and make them, number one, comply with the new rules that we have, but number two, try and update to situations that you guys actually deal with instead of what was going on when they originally passed that position statement. The ones that I think are particularly interesting are the conflict of interest one. I don't remember the number off the top of my head. I don't know if you're on the task force, you might have it memorized.
I don't. Not off the
You
top of my head.
don't have the position statements
I do
memorized?
not all 29 of them.
Not
no.
29 of them?
No.
But there's one on conflict of interest. It talks about the different times you have conflict of interest and how you deal with those conflict of interest. And the other thing they updated was transaction broker, when you can be a transaction broker in situations. And those two together are nice because before we had this position statement that just talked about transaction broker and said essentially, oh, you should be a transaction broker in these circumstances. But it wasn't very good guidance because number one, sometimes it made sense to be a transaction broker in some of those. So they've changed the whole concept to this informed consent, meaning if you believe you can remain neutral, even though you might be, you have a seller, you're listing their property, the buyer happens to be your brother, and you believe that you can remain neutral, as long as you tell both parties that you have this conflict, that the buyer is your brother, and the seller, and in particular, but also the buyer, give you informed consent to move forward as transaction broker, then you can do that. Now, the key to that is that you have to actually remain neutral, and you have to have the ability to remain neutral. So they're worth a read. I think those are the biggest ones that stood out to me. I mean,
Yeah,
there's others too, obviously. But.
Yeah, but along those lines, the conflict thing is really, people have, and the conflict is also tied to the disclosure. So to the extent that you're working as an agent for somebody in your immediate family, and by that I would mean, your spouse, your parent, your child, sibling, somebody in that immediate circle or ring of family members, there was also disclosure requirements or expectations of that relationship. If you're working as an agent, that is no longer the case. The only reason you would have disclosure requirements is if you individually yourself as a licensee have a financial interest in the transaction. In that case, you would be required to disclose. Now, disclosure is always best, and so there's nothing that would preclude disclosure in that event. But in terms of it being expected or mandating, let's say you're representing your child who's purchasing a home, that you're disclosing that you're a licensed broker, that expectation is no longer there because, in fact, in that capacity, you would be acting as their agent, and therefore you're going to be giving them the same you would be giving them the same sort of fiduciary that you would to anybody else, and advocating for them, acting in their best interest. So the fact that they're your child doesn't really have an impact on how you would be treating the opposite party. And so I think there was some good cleanup and clarification specifically with regard to that. And the only thing I'd come back to with regard to the conflict of interest is it does with these changes encourage you guys to really analyze whether or not you can act as a neutral third party, as opposed to just sort of precluding situations where you absolutely must be an agent and can't be a TB. You could be a TB for, your cousin, as an example, if you can truly remain neutral in that situation and can comfortably treat both parties equally as the transaction broker, then to Damian's point, with the informed consent of that situation, you could move forward as a transaction broker. But I would be conservative in my analysis with regard to your ability to act without conflict, because anytime something were to go wrong, or the other side were to say, oh, they didn't treat me with neutrality, or they didn't treat the transaction with neutrality, I think there's going to be some pretty aggressive scrutiny with regard to your analysis of the potential conflict, as well as the informed consent that you're obtaining. And so while I think it's a bit of an expansion of your ability to work in those capacities with people in your close orbit, I would treat that conservatively as you're looking at those.
Yeah, one other thing I would add, and I don't know if this is in the position statement or not, but if you are in that position with the informed consent, make sure you give somebody an out. If they all of a sudden don't feel like that you're acting as a neutral and they bring it to your attention, don't be like, oh, I already got my informed consent. Sorry, I'm going to stay in this transaction. Know better and get out of the way and say, that's fine. I'll have somebody else take over this transaction. But the nice thing about it is the one that always threw people off was previous business builders or this kind of thing. And this really does kind of fill a gap there that was problematic for a long time.
Yeah, existing clients where you're doing lots of deals or potentially lots of deals over the course of a period of time. I think there was a presumption that you would have to be an agent in that case. And again, if you can go through that analysis and determine that you can act in that transaction without a conflict, then you could, and justify it and provide the informed consent, then you could act as a transaction broker in those capacities. The other one that I just want to point out, and this is a little bit more innocuous, and it was formerly Commission Position Statement 46, which was related to adverse material facts. One of the things that always drove me crazy, a few years ago, when we changed the contract just over 3 years ago now, the last contract changes, not the ones that came into place this year. The standard for a seller's obligation to disclose to a buyer, it used to be latent defects, and it changed to adverse material facts. And the nice thing about that is that standard adverse material facts then became directly aligned with what your obligation as a licensed broker was under license law. You've got the same disclosure obligation now as your seller does and have for the last 3 years. And one of the really nice discussions of what an adverse material fact was came out of CP 46, which is no longer that number. I don't know the new number.
CP 26 or something.
Yeah, it's moved back into the 20s, but it's still called Statement on Adverse Material Facts. And the original one had some language in there that basically said, this is not the seller's obligation. This is prepared for brokers, not for sellers. That language has been removed. And I think it's a really good tool for you to share and utilize with your seller as you're providing your seller with the seller's property disclosure form to say, hey, seller, read this first. And these are some of the things that you can be thinking about as you're getting ready to prepare or complete this seller's property disclosure with regard to adverse material facts and the seller's obligation.
Yeah, agreed. I agree. I advise people to use that position statement all the time, and now it lines up better than it did before. The one caveat to that is that if it is not the real estate commission approved contract, if you're using a builder contract or there's some other situation, keep in mind that the disclosure obligation may not line up anymore. And you probably won't be using the seller's property disclosure, but if you do have that conversation with your client, keep in mind that, there may be a different standard in a different contract. That's the only thing I'll say. But yeah, it's nice to have that. There's a lot of other changes. If you haven't had a chance, do read the position statements because they do offer a lot more guidance than they have in the past because they were just so difficult to rectify with the different rules and they didn't make a lot of sense on some instances, but they are updated and fresh and I think fairly easy to read, which is nice.
They're good education tools, good instructional tools. I mean, for those of you who have large or small offices, if you're running brokerage meetings to kind of tackle, look at one or two of those in a session. I think there've been some pretty significant improvements. So and those were all just approved formally last Tuesday by the commission, with the exception of one, which is still pending, and I think will obtain approval in some format at their next meeting.
In August.
At their August meeting.
The quick question coming out from the chat, guys, from Maria Chambers. What about listing for my employer and acting as a transaction broker for buyers?
What about listing for my employer?
Yeah, so it sounds like there is an actual contract to list for the employer, but a transaction broker for the buyers.
That's gonna. I mean, again, you got to do the analysis of what's conflict of interest, and to me, I would err on the side of treating the buyers as a customer anytime that you can, just because when you're listing the property of your employer, you probably started out as an agent. You obviously get a paycheck that creates a different kind of relationship. It's more of an ongoing relationship instead of a one transaction kind of thing. Anytime you can, this doesn't change the analysis of trying to treat a buyer as a customer when you start as an agent. That's always been my preference. And I think that you've said that as well. Start there. And then if the buyer insists they want some kind of representation or something else, you're gonna have to do the analysis as to whether or not you really feel you can be neutral. In that case, as Scott was alluding to before, it'll be scrutinized and you might want to err on the side of caution as far as trying to pretend you're a transaction broker and being neutral when one of them is an employer that signs your paychecks regularly. So
I think that's good. And I think actually that's a good question and a good way to kind of analyze a conflict. I mean, if you told me your employer was, a plumber and you worked for somebody who was going to need the full boat of assistance with the contract, with, understanding the transaction, all of your hand-holding, your advice, advocacy, all those kind of natural things that would flow, then I would say, absolutely, you would probably be put in a conflicted position. If you told me your employer was a real estate lawyer who just literally wanted you to prepare documents and could really sort of babysit themselves in the transaction, then maybe that would be a situation under your analysis of the specific situation where you could justify acting as a transaction broker. So I think that's an interesting question of the type of thinking that you can now do. Again, with the caveat that I would err on the side of being conservative if you think there's any reason at all that you can't be truly neutral in handling the transaction. Because as Damian mentioned, and I think I did before, the scrutiny, if there is a problem, if there's a complaint, is going to be probably on you to justify your analysis of that conflict or potential conflict.
That's interesting.
Yeah.
Does put a spin on things as you have more and more agents who are coming on who do have a day job.
Yeah.
Right? Because there's the broker in charge is going to say, hey, go out there and hustle and utilize your spirit. And it might be the people that you're working for. Yeah. I never thought about that.
Yeah, no, that's a good question.
Yeah. And I just to reiterate, just because you have more expansion of being able to be transaction broker, that doesn't mean that you should use that in every single situation. I mean, I still want to stress that if you can stay in an agent customer relationship with buyers that you don't have that you didn't know or you don't have a relationship with, that's still a better place to be. This just gives you more options when you need that flexibility because the buyer now turns out to be your cousin and you're working with your employer. I mean, that now is a different analysis.
Yeah, I think along those lines, that it's important, and I point out to brokers a lot. Transaction brokerage as a brokerage relationship in Colorado doesn't exist. It wasn't statutorily sort of offered so that licensees could double in deals.
Yeah,
that wasn't the intent. The intent of creating an ability for one individual to essentially assist two parties in a single real estate transaction is a consumer benefit, at least from the legislature's perspective. When dual agency went away, obviously, which made a ton of sense as well, there needed to be an opportunity for consumers not to have to engage two separate individuals as agents in order to facilitate a real estate transaction. And so if you keep that in mind, anytime that you're thinking about your services as a transaction brokerage, I think that helps, I don't know, sort of shape your focus on the relationship that you have with those two parties.
Another question has come up. It comes up quite a bit, actually, on my end. As an agent of the seller or buyer, is it still necessary to disclose that you were related to your client?
So that was what Scott was talking about. And in the license law, so first of all, you do have an obligation to disclose that you're related in certain circumstances. If you're a principal, you have to disclose that. But this is saying now that if Nobu is my brother and I'm working with Nobu to buy a property, that there's no longer this, I have to disclose that Nobu is my brother, because the reality is there's no conflict, there's no advantage that we have because he's my brother. I'm still his agent, regardless of whether he's my brother or he's a member of the public. My duties to Nobu should be the same regardless. And so that's why when Scott was talking about that change that says you do not have to disclose that, it's because it doesn't change anything with the seller or the listing broker as far as their representation of their client. Now, if I'm not mistaken, we just did Ethics Day last week, and I think there was something in one of the articles that says, as a realtor, you still have a duty to disclose in some instances. So I think that duty might be a little different than what we have now at the Real Estate Commission.
Yeah, your personal relationship, but I think that's still contained to a financial interest.
Okay.
So I think it's still the same. It's the same standard. It's just, but again, remember that the situation where you're not disclosing or you don't have an obligation to disclose that Nobu's your brother is if you're acting as an agent for your brother, because whether it's your brother or whether it's somebody you just met, if you're acting in the capacity of agency, you should be giving them the fiduciary obligation, which is their interest above all else anyhow. And so it wouldn't matter. The point of this change is that it doesn't matter for disclosure purposes to the other side. If you've disclosed yourself as an agent for the buyer, then whether the buyer is your brother or some random third party that you have no relationship with, you're offering them the same advocacy and advice and sort of fight as you would in either case. the situation, if Nobu was your brother and you were trying to be a transaction broker, that's the shift there where you're going to be disclosing that absolutely, and you're going to be obtaining informed consent. But before you do any of that, I think you would, unless you had an estranged relationship with your brother, which would beg the question of why they were working with you to begin with.
Yeah.
I think you'd have a really hard time analyzing a sibling, parent, child, or other immediate family relationship. I think you'd have a really hard time analyzing that from a conflict of interest standpoint. As a situation where you could act as a TB. I think in almost any of those cases, your analysis would have to conclude that you would need to be their agent.
Yeah, I mean, I can think of some, and that's why I like the flexibility of this position statement. I can think of some where your brother is buying the house from the sister.
Yeah,
obviously,
great.
TB would make sense. You've represented the seller for 6 months and were their agent throughout it. And now all of a sudden, your daughter wants to buy the property. You can see where the levels go up to the same, but this is not, as Scott's saying, this is not an excuse to change the TB in every circumstance. You have to really evaluate those levels, talk about whether you can actually truly believe you can be neutral, and then telling both clients, are you okay with me in this position? Because it's really ultimately up to them to decide whether or not they also think you can remain neutral.
Yeah, the family relationship is a great example. Your son's buying a property from your daughter, right? In that case, you probably could justify neutrality, even though it's that immediate circle. And honestly, that's a question that I've had over the years a number of times through the hotline and other places. And prior to this update, it's been kind of hard to resolve that question.
Yeah.
Cool.
Any more questions in the chat on this? All right, well, we're going to keep driving this thing, I guess. Damian, what do you think on that list there that we want to talk about?
I think you should talk about that land vacant property fraud, because I think that one's pretty cool. Well, I think it's cool.
It's
not so many title companies think it's cool.
Yeah, cool. So this is kind of the newest fraud that we've been seeing, and it hasn't been so prevalent in the metro area because the basis of it really almost requires vacant land. I suppose it could happen with a vacant property. I haven't heard about it happening.
A little tougher because there's more controls as far as
Inspections, accessing
Yeah,
the property,
exactly.
everything else. But this started about probably 8 weeks ago. I got my first call on this, and it was out of Crescent Butte, and an employing broker called and said, "This is a really crazy situation. You're not going to believe this, I don't think." And I said, "Well, hit me," because I generally am often not shocked by what I hear, because I hear a lot of shocking things. And this one kind of opened my eyes. So it was a vacant piece of land, residential to be built on kind of property. A buyer broker had been working with buyers in Crested Butte, and the buyers identified, listed on syndication website, a for sale by owner piece of land that was right in exactly kind of what they were looking for, but it wasn't listed on the MLS. And so the buyers contact their buyer broker and they say, "Hey, you haven't shown us this. Looks like, what's going on with this?" And the broker goes, "Well, it's not on the MLS, so let's see what's going on." So they go and drive by the property, makes sense for the buyer. Buyer broker reaches out to the seller who was doing the FSBO, and it's an out-of-state seller, reaches out to the seller. Seller says, "Absolutely happy to pay a commission, happy to work with you on this transaction." And so they go forward, put it under contract, and ultimately close on the piece of land, the buyers do. And about 3 days later, then this same broker who worked with the buyers gets a call from somebody else, another proposed seller, who says, "Hey, you just brought buyers to my neighbor and friend's property and they closed. And now I'd like to sell my lot and put it on the market." And so the broker puts it on the market, this time on the MLS. It takes the listing, puts it on the MLS, puts a sign on the property, on the lot, and then starts marketing it and gets it under contract. And in the meantime, another prospective seller, another network person from the original seller, contacts this broker and says, "Hey, I've got another property that I'd like to list. I hear you're doing a great job." And so she takes that listing. And then before the second property
transactions,
three transactions before the second property closes, she gets a call from a furious property owner who actually owns the second lot, who is driven by his land, and says, "What the hell is your sign doing in my yard? Who are you? Why are you selling my lot? What's going on here?" And so this whole thing starts to cascade and unravel. And she realizes that effectively all of these scams are taking place by one quote unquote out of state seller. So one property closed, second property under contract, obviously they terminated that. And then the third listing that she had taken, obviously they didn't move forward with any of that. But the interesting thing was, and after I got the call, I reached out to Damian and I'm like, I'm confused here. I'm like, how could this occur? Somewhere there's got to be a failure in the chain of events that could allow this kind of fraud to happen, because otherwise this is way too easy, right?
Yeah.
It just doesn't make sense.
I mean, yeah, vacant land. I mean, you can find that on the assessor's website, or absentee sellers. You can find that because it's a mail out. I mean, it's very, you can see where this, and we were talking about it. I'm like, oh, come on, the more we talked about it, it's like, I have no idea.
Yeah.
I have no idea where the failure is.
The one place it would have failed would have been if there had been debt on the property.
A loan, yes.
If there'd been a loan, then there would have had to been a payoff, and there would have been a request of payoff, and the bank would have probably coordinated with their actual owner regarding, authorization for the payoff and everything else. But so that is the property profile, is vacant land or vacant property that is owned outright without any encumbrance or, any debt on it. And
an absentee seller.
And an absentee seller. But the seller doesn't even have to be absentee, like out of state.
No,
right?
No, just somebody that's not
they're
close.
Yeah, because it's a vacant lot that they happen to own someplace that maybe you don't drive by, on a daily basis or weekly basis, or, it's an investment property that you're sitting on up in Crested Butte.
See, they got greedy. They should have let that second one close before they went ahead and listed the third. But
So, all right, hi, I'm chiming in here. The hand is.
Can they hear you? Julie, can you hear Nobu from over there? Okay.
Okay. So let's take it to residential, because doesn't even vacant land, a residential home, don't they have title on it? Could a preliminary title pull have shown who the owner is?
Well, they knew who the owner was.
Yeah.
This was somebody that was impersonating that owner and saying, "Oh, nope, that's me." Yep.
Yeah. So let me close up, because I think that answers this. So the way this was, the seller, I believe, was in New York, in the one that closed, and the actual owner was from New York. The property owner lived in New York, and so what we believe happened is that certainly somebody presented themselves as the owner in the owner's name with like a fake ID.
Oh, wow.
Yeah, it was a mail out. And so they mailed it out. Everything got notarized and signed. And the only thing we can think is that either as a fraudulent notary, which you still have to have the money go into an account in that name. I mean, it's not like the title company is just going to say, here's a blank check, give it to whoever you want. They're still going to want it to go to somebody. So we were thinking it's got to be some kind of fake ID, you know, and some form that they took it in and said, oh, nope, this is me, and got it notarized, and then just send it back and then open an account in that person's name. And obviously when the money hits the account, it scatters,
Right.
Get rid of the money as fast as possible.
So the fake ID thing is like, and I'll reveal too much about myself here, but I have 3 kids. I have one who's now 21, but I have one who's 19, and I think she's 21 in Texas.
Yeah.
And I have one who's 17, and I believe he's 21 in the state of Washington. And the point is that for like $80, and I don't know where they go, but it's someplace overseas, they can get 2 identification cards that replicate, I mean, almost identically. You can hold a Colorado ID up against a real one against a fake one, and right down to the little hologram, they're replicated. So the point is that for some scammer who could go and look up property records, find a piece of vacant property that you can see what kind of debt would be recorded against it. So all of that's public information. You can see the owner's name. Ideally, it would be in the name of just one individual. So you only have one party that has to sign to convey the property. Go and order 2 fake IDs for $80. Either present those to a notary who's not doing a very good job of verifying identity, or a fraudulent notary who's in cahoots with you, or a notary that just orders a fake notarization stamp. I mean, think about how easy that would be to replicate, and probably present that same fake ID to some bank to open an account. I mean, the banks, they take a copy of a ID. They're not paying all that much attention. People aren't generally opening bank accounts with fraudulent ID cards. But again, these things are really, really very passable document.
there's no reason to scrutinize it. It's
Yeah.
somebody walks in, opens a bank account. It's not like they say, okay, well, now we need a thumbprint. We need to
So-
do a
so-
retinal scan.
So if I have clients that have vacant land, which right now, there's never been a better time to own land right now because they're selling like hotcakes here.
Right.
What would you suggest that they do? Somebody's bringing up like title freeze products.
Title locks.
Yeah.
I don't think that really
I don't
applies.
think it
And
works
I
either.
don't like those title lock. I mean, you guys, your clients do have title insurance when they bought the property. So that is some protection for that. But let's talk about what happened with the one, and then we'll talk about where this could have been found. And I think that helps,
Okay.
kind of lay out what brokers should be doing, what title companies are now going to be doing to try and stop this.
Well, and the reason this isn't just in Crescent View, by the way. So within a week of this original one, this exact same scam was being attempted in Pueblo, in Evergreen, up in Winter Park, Colorado. I was getting a couple of calls a week from different areas of the marketplaces, or different marketplaces within the state, people were saying, hey, there's somebody this is a scam that I'm hearing about. And I started doing a lot of education and talking about it. Carson out a big newsletter. And so we've been kind of flooded with attempts of
Colorado
this.
Real Estate Commission, I think, sent out a notice on
Yeah,
it
the
too.
commission sent something on it. And so anyhow, on the one that I'm aware of that actually closed, obviously title took it 100% of that on the nose and had to pay out the title claim for 100%. The brokerage firm who collected the commission has been requested to refund their buyer side commission on the transaction.
Buyer didn't get the property, obviously.
Yeah, the closing was essentially, I guess it was reversed. I guess they do a quiet title action or something.
Never happened.
Yeah.
Never happened because
It was a fraudulent conveyance. And
Yeah.
so anyhow, so it's the title company paid the claim and the buyers were made whole on the one, the other transactions failed. I have not heard about this. The nice thing about our ability to communicate through, this technology through, CAR and our network of realtors around the state is that any of these frauds, the quicker you can shut them down, the quicker they'll move on to another state or another region to try and attempt.
you mean they
this.
don't just quit?
I mean, I can't say that they don't, but I mean, we saw this with wire fraud a few years ago. It wasn't
Yeah.
until the industry really started, taking it seriously and using, email signatures and so on, or putting, wire fraud advisories and really being mindful of all of the wire fraud things. But in comparison, the wire fraud scam was incredibly complicated.
Yeah.
If you think about it, I mean, you had to have people like hack an email and monitor a transaction throughout, and then at the exact right moment, be able to send wiring instructions to the correct party and collect on those.
And you had to have a mule account set up that somebody in the United States would set up an account and allow you to wire into it in order. I mean, it was
Very complicated. This is super simple if you stop and think about it. I mean, this is you can identify by public record, and I'm not encouraging anybody to do this.
Yeah, this is not a how-to on fraud.
But you identify a single owned piece of land, vacant piece of land and public record, no debt, do a FSBO listing, and you can kind of see where this would occur.
Yeah.
So
Susan Pierce is asking, could the seller put a $10 lien on the property that has to be paid at the time of closing? So it kind of looks like a false lien. I never thought about that.
let me-
But I mean, first of all, in this situation, the seller didn't lose their property. I mean, it was a fraudulent conveyance. So it's not like there was ever any real transfer of property. I guess, you can see where this could have gotten bad though, right? If they hadn't caught it when they did, and then the buyer goes and they build a house on it and they do all this other stuff. But I don't think it's going to be the seller that's necessarily harmed. Maybe they have a house on their property they didn't want or something along those lines. But, you can see where the buyer, it could have been a lot worse. If insurance pays out, usually the amount of the title insurance policy is the amount of that you pay for the land. So let's say you paid $300,000 for the land, and then the buyer builds $1 million home on this property, and then all of a sudden finds out that it's not covered. You can see they get $300,000 back, but they don't get the rest of that. So and then my guess is they sue. Well, I mean, you always sue the broker. Apparently, is I think how it works, but probably a title company or somebody and saying, you didn't make sure that we were protected. One thing that the title companies are doing now is when they have these, first of all, talking to Brianna, she's telling me they aren't even going to do mail outs on those kind of things anymore. They got to have something that's more of a verification that the seller is actually who they are, instead of just these emails. Because that's the other thing, is they didn't talk on the phone, from what I understand. It was all email communication back and forth with everybody. So they're going to want something more to verify that person is in fact who they say they are before they're going to just allow this to happen anymore. So there's going to be more protections. LTAC sent out, that's the title company's equivalent of CAR. They sent out a notification to all of the title members, letting them know about it too. So the good thing is that this fraud has been kind of had a spotlight shined on it. You're going to see a lot of the title companies at least aware of it and maybe a little bit more cautious about what they do in those circumstances.
I would say in terms of, one way to potentially address it, a cheap, easy, free way to address it is Google Alerts. So imagine if the original property owner in Crested Butte had their property address, if they'd set up a Google alert for that. When that fraudster listed it as a FSBO in Zillow, that owner would have gotten a Google alert to say, hey, your property address just pinged. And so if you guys aren't using Google Alerts, I've been encouraging the use of those for years. We used to have a scam in Colorado, and this is a little bit analogous even, where your broker's listings were being used by fraudsters. They would take your listing photos or one or two of them and put them onto Craigslist and try and put a property that's vacant, like a vacant home, for rent. And they would try and, basically induce somebody to pay a security deposit or a down payment on a rental.
This one's much better because it's a lot more money, just in case you were wondering.
Yeah, but when you use Google Alerts and you put your address in, I would encourage you guys for your listings. If you take a listing, put the address in just as a matter of your checklist. Put it in Google Alerts. If somebody's marketing your listing in a way they're not allowed to, or you don't want them doing it, you want to know about that, right? And for your own personal residence, I keep my own personal residence as a Google alert. If something's popping up about my home on the interwebs, I kind of want to know about that. And so I think the same thing would apply, and it would have probably even better than any of the title lock products or any of the stuff that they advertise, on daytime television, which I'm dubious about myself. That would be a much more instantaneous and completely free way to address what could be a problem.
Yeah. As the market shakes out, actually, Google Alerts for listings that might be on the market for longer than 3 seconds is actually a pretty good idea. And you can also take the pictures of your listings and drag them into the Google search bar to see where your pictures are being used. Because it might be a picture of your living room with somebody else's dining room with a third person's address. Scams on that are everywhere, even now, for rentals.
Yeah.
Right.
And for those of you that did not get to see Nobu's hand gestures, you are really missing out.
Yeah, the Google image search and Nobu makes it even easier by just taking your images. There's metadata or stuff behind in each of those images. And again, you want to know where your photos are. If you've got property photos, who's using them, how are they being used, where are they popping up? All of that stuff is good and completely free sort of resource to utilize technology and protect yourself and your clients.
We got a request to go to bridge cash buyers.
Oh, bridge cash buyers. Yes. Bridge buyers.
We'll see. That's a perfect example of one of the topics I mentioned earlier. It's like, it's almost going to fall off the board here in terms of this potpourri session, just because of market conditions. But go ahead and describe.
Yeah, particularly since now we've seen the Fed raise the interest rates another quarter or 3/4 point, and it sounds like it's already affecting mortgage rates by 0.5 point. So, but where this comes from is in a crazy market where we were having, 20 offers on property or whatever the case may be, and we had buyers that were desperate to get into property, and sellers were like, nope, we want cash. We don't want contingencies. We don't care. And the buyer had some property to sell, but they couldn't even get anything under contract because all the sellers are like, nope, we want cash and that's all we want. So the bridge buyer program is the ones you guys have probably heard a lot about with the, typically it's a lender, but it could be any kind of different person that just says, hey, what we'll do is we'll buy the house for you. And after we close, you can move in to that property. You can go ahead and sell your property, and then we'll refinance you once your property sells into the new property. The concept is to make it so the buyers were competitive so that they have these cash offers, also make it convenient so that they can move once instead of selling theirs and then maybe being homeless for a couple of days or something as trying to get everything to line up. So that was the advantages of them. The problem we're seeing now, or I wouldn't say the problem, but what we're seeing now is obviously as homes are on the market longer, we're starting to see price reductions. We're not seeing multiple offers. I had somebody tell me the other day, they said, oh my gosh, I've had a house on the market through the weekend. I don't know what's going on. And well, it's the change in the market that we're seeing. I don't know how popular those programs are going to be. They still will probably be around, and they might be something a buyer could use depending on the expense or what they're willing to pay for that convenience. But obviously that's the way that the program worked. My concerns over the bridge buyer program were the fact that a lot of them have this concept where you're starting to work with a buyer. And so you probably have a buyer listing contract that makes you a buyer agent. So you have agency with them, and then they're engaging this buyer, this bridge buyer program. And they want you to make an offer for the bridge buyer on this property that is ultimately going to be for your client that you owe fiduciary duties to. And then the working relationships just gets really, really messy because I don't know, so are you going to act as a transaction broker for the bridge buyer, and this person is just gone, but yet this person is supposed to be the one that buys the property, and are you acting as an agent for them? It's really messy. And some of the companies, in all fairness, have taken a lot of time to try and figure out how to make that relationship for the broker work within our confines. And others have just been like, it'd be fun. It'd be fun if we bought houses and then sold them to our clients later, and they just haven't really done anything. So the alarm here for me is to let you know, you got to be wary of your working relationship and who do you owe duties to, and what are those duties, and what happens when the second transaction, do you still represent the buyer and now you don't represent the bridge buyer? It's really messy. So, and I know you have some thoughts on that as well.
Well, yeah. I mean, one of the things, you have to have a relationship, right? Because in most of the way these programs work is there's two contracts, and you who have the buyer are writing the offer, but you who have the ultimate buyer are writing the offer, but you're writing the offer in the name of the bridge buyer, the company that is, and they're the buyer on the contract. And so for a while there, I was getting all these situations where where the broker who was writing that offer had no brokerage relationship whatsoever. They hadn't established a transaction brokerage or agency relationship with the bridge buyer. Well, if you don't have a brokerage relationship with one of the parties to the transaction, in this case, you wouldn't, you're practicing law, because you don't have a right to prepare our state farm contracts unless you have a brokerage relationship,
or at a minimum violating license law.
Yeah. And and then to take that a step further, two contracts. The first contract typically was written on commission approved forms. The second contract, where the bridge buyer then turns around and sells it to your buyer, is very often not a commission approved form. That's a contract that's been prepared by the bridge buyer's lawyers or whoever, often includes a lot of the financing pieces to the whole thing. And so then you trying to hold up your end of the bargain for your own buyer are now in a place where you've got a contract that you can't really advise your buyer on because it's not a commission approved form on the second transaction.
Yeah. Another issue that we've seen come up with this, I mean, you see where the working relationships is a problem. I'm sorry, did you have any more to add on that? Or the other one I've seen is that, so the bridge buyer, sometimes they're assigned. Sometimes the buyer steps in and then the bridge buyer takes over later, which, my concern has always been the buyer originally is probably the one that needs to do the inspection, probably needs to be the one that deals with the title issues, because they're ultimately going to be the end owner. So, that becomes messy with inspections and those things as to who's performing them and who's advising on them and who's on the contract to draft those things. It's really messy. And the other thing that's messy is that when the buyer either assigns or the contract is done in the name of the bridge buyer, and the bridge buyer closes, and then they go ahead and sell the property to your buyer, and all of a sudden the buyer moves in and realizes that the seller lied about the roof. The roof has a leak in it, or they didn't tell you some kind of structural issue or something. That creates legal problems for the buyer, because now they do not have what's called privy of contract with the previous seller who was the scoundrel. The only claims they have against are maybe the bridge buyer, who probably didn't know anything about this. So your buyer may not have claims against the previous seller based on the fact of the way these relationships work. So the point being that I think we're trying to say is there's a lot of problems or potential problems here, and you just got to be mindful of how they work and make sure that you're working through all that so that you don't have the buyer that you started with, who you had the agency relationship with, is now in a position that they're somehow harmed because, particularly if you recommended they use one of these programs. I mean, that creates a lot of other risks. Yeah,
the programs themselves, that's not a comment on the programs. It's just a comment on some of the concerns related to, how they're structured in a differing manner almost across the board. But, the reality of it is, again, with the market conditions changing, I think we might be seeing a lot less demand by sellers for exclusively cash buyers. And that's going to strain how these programs operate and the frequency with which your buyers may be forced to utilize them. More questions in the chat? Anything?
Yeah, so I think you answered a lot of the risk questions. Yeah, the business models, because to Tony's point here, where the brokerage is the bridge buyer, you're kind of answering that as well with kind of the proprietary contracts that are out there. But really, at the end of the day, you got to do your due diligence with your client to talk to these guys. Orchard is actually on the Zoom right now, so they've got one of those models as well. It's not a question about the model itself,
No,
but it's just kind of the relationships that are being caused.
Just understand how that works and what that looks like, and make sure it goes back to kind of that conflict of interest we talked about with the commission position statement of figuring out what is your relationship and what are your duties to each of these parties during the course of this transaction. And I'm not familiar with Orchard's program, but a lot of those guys have taken time to hire lawyers and try and figure out how to put this program together. But it doesn't all the fact that the broker has to do their own due diligence of making sure that they understand where they fit in that relationship.
Yeah. And I guess the other thing I would add on that point, though, is that you do have to be cautious as a broker getting involved in any analysis of the agreement, the first agreement, the agreement that your buyer signs with the bridge buyer. Because again, that's a contract that you shouldn't be interpreting for your buyer. But there are certainly, I would reinforce with your buyer that they want to make sure they understand what the agreement that they're getting into, and potentially get some proper legal advice if they've got concerns about that contract. Because I get that question a lot. Brokers will call and say, "Hey, my buyer's asking me for some input on this contract, and I don't know where to start.
What does this provision mean, or whatever?" Yeah.
So avoid that as a broker as well, for sure.
Cool. We have a request for FHA and VA appraisal gaps.
Yes. Now,
yeah. Well,
maybe you should start with the appraisal gaps. And
so
if you've been living under a rock, you may not know what an appraisal gap is.
Well, I don't think I'll have to recharacterize for anybody on DMAR Connect here what an appraisal gap clause is. Another feature that has been demanded by the market and by sellers and by buyers looking to be competitive, and we'll see where those are. I think that it's a phenomenon that probably won't entirely go away, but we would certainly see diminished volume of them. But they're problematic in a lot of ways, and I hate appraisal gap. Actually, let me talk about appraisal gap clauses from another perspective, then I'll let you hit the FHA VA buyer program. And I tell this story a lot because it's an important one, and it goes to so many areas of how you guys work. Appraisal gap clauses, terrible for buyers, in my view, very risky, often misunderstood, have led to a super increase in earnest money disputes because sellers, anytime they receive a termination from a buyer after an appraisal has come in lower than the purchase price and within the gap, if a buyer is terminating for any other reason, the seller's pretty cynical and they say, "I'm not signing, I don't buy it."
Obviously, it's because the appraisal didn't come at full price and you don't want to pay the appraisal gap.
Yeah.
That's the.
I'm not
logic.
accepting your survey objection or survey termination now that we know that your appraisal gap is probably why you're actually doing that. So it's been problematic for a lot of reasons for buyers. This story is chilling, and it's problematic, and it illustrates why it's problematic for everybody and why the market conditions have been problematic for even sellers as much as they've had a nice windfall. The story that I have was an actual call that I got from a broker. It was a listing broker, and this was a property up in outside of Granby, Colorado. It was a cabin for $415,000 cabin, had 26 offers on it. Jeez. And this listing broker, very good listing broker, does a great job, called and said, "We had 26 offers on this property, overwhelmed with offers. They had multiple appraisal gap clauses, but the one they accepted in this case was a purchase price of $510,000, and it had a $10,000 appraisal gap clause." Now, you could argue that a $10,000 appraisal gap clause on a $95,000 spread is probably not sufficient in itself, but it was what it was. So $415,000 list price, $510,000 was the purchase price on the contract, $10,000 appraisal gap clause. And as you guys know, most appraisal gap clauses are written in a manner that is essentially it's an obligation of the buyer. It's a unilateral obligation on the buyer to bring additional money in the event that the property doesn't appraise. But it's not typically a bilateral or obligation on the seller to reduce the purchase price by even a penny. It's just buyer will bring more money if it doesn't appraise, not seller will take less money. and unless it isn't. So just to give you the facts here, 415 list, 510 purchase, $10,000 appraisal gap clause. This clause, though, had 5 extra words in it between 2 commas in the additional provisions. It said buyer agrees to bring and seller agrees to accept up to $10,000 over and above. So that made it a bilateral clause, made the seller obligated to do something, reduce the purchase price. So 415 list, 510 purchase, 415 appraisal, 425 purchase price.
Good deal for the buyers.
Seller was out $85,000 because the broker and the seller missed 5 words in the additional provisions of the appraisal gap clause. And so I use that story because everybody's been using appraisal gap clauses, talking about appraisal gap clauses over the last couple of years, and they've been a necessary evil in the marketplace, I will admit, but they come with incredible risk to the broker because, again, this poor broker who's analyzing and spreadsheeting and working through with their seller 26 different offers to miss 5 words and have it be an $85,000 boo-boo is painful. And I think it illustrates why when we talk about having a little bit more market parity, why a little bit of a flattening in the marketplace is probably a good thing for just about everybody. I think it illustrates that perfectly. So as it relates to VA and FHA, I'll let Damian kind of chime in on the appraisal gap piece.
Yeah. So, obviously everybody's trying to compete. And so they're putting in these appraisal gap guarantees. And one of the problems though, is that, FHA and VA, our contract has that if the buyer is going to get FHA or VA, it has an escape clause in it. FHA escape clause and a VA escape clause. And both of these clauses say that if it doesn't appraise for the purchase price, buyer gets their money back. And so the point of this is that essentially a appraisal gap guarantee in a contract for FHA and VA is unenforceable. It doesn't do anything because once the seller has agreed that they're willing to take FHA and VA, those federal government provisions are a part of that contract. And that means that you can't do an appraisal gap guarantee over the top of those. And the stories that I've had have been this. It's the buyer says, oh yeah, we'll do a $20,000 appraisal gap guarantee. They go through the whole thing. They're FHA. They put in the contract it was FHA. All of a sudden it doesn't appraise. It's 20,000 low. And the buyer says, I'm out. I want my money back. And the problem is that brokers were not telling their sellers that these may not be enforceable. So all of a sudden the seller's like, well, wait a minute, they did appraisal gap guarantee. I want the earnest money if they're not going to close. It's 5,000 earnest money, give me the earnest money. And so the broker's now in a terrible position because they didn't warn their seller that these might not be enforceable. And so now, if the parties start fighting over that earnest money, it could end up, my fear has always been this. I haven't seen this yet, but my fear has always been that it gets escalated to a VA or escalated to FHA about the fact that the seller is not giving this money back, even though this is a contingency of being able to accept FHA or VA loans. And all of a sudden they do this investigation and they say, you know what, we're going to pull the broker's ability to be involved in FHA or VA loans. And that's a real possibility. HUD used to do it years ago when they'd have problems with HUD homes, which I know most of you may not have even heard of, but HUD used to sell homes. And one of those contingencies is that you had to meet these contract provisions. And what they'd find is that if the broker didn't deliver earnest money or something like that, they would yank the broker's ability to do FHA loans. And back in 2009, that was a big deal. But that's the same thing I could see as part of a reprimand on FHA and VA is that if the brokers end up in this dispute and somehow the buyer ends up losing their earnest money based on whatever clause you put in there, they just might say, hey, broker, sorry, you're not going to be able to do FHA and VA financing anymore. And that could be a big hurt. So that's where my concern comes from that. And it might not even just be the broker. It might be the whole brokerage firm. So,
yeah. And I think this is an interesting topic because over the last couple of years, as you guys know, FHA and VA buyers have had a really hard time in the marketplace, right? That sellers just have not given those loan conditions out to a lot of buyers. So you haven't seen a lot of them, but this may be an interesting place where when we see the market cool a little bit, we might see a higher likelihood of FHA and VA buyers and still be in this sort of appraisal gap or competitive market where you could see that being more commonplace or still prevalent, at least in consideration of an offer. So this combines kind of two concepts, one, flatter, cooler market, FHA and VA loans, and the other hotter market appraisal gap clauses. And so I could see where this these issues come up. And I guess the takeaway, really, if you're a listing broker, I think the important thing, if you receive an offer, I don't even know that you've got to counter it out, but you certainly need to set your seller's expectations with regard to their ability to keep the earnest money if the buyer terminates, if they're giving those loan conditions. And so keep that in mind, at least, because the seller's going to be mad if they don't.
And I did have one of these just the other day, and they're like, what do we need to do? I said, you need to give the earnest money back. And if the seller's that upset, it's probably better for the broker to figure something out with their seller to make them feel better, just so that they don't have to deal with some kind of complaint or some kind of other issue coming out of it.
Yeah.
What we got next?
Yeah, you guys, Tony is, I think, really good with everything you guys are talking about. Eric Romero would like to hear about the Designworks lawsuit, also known as crazy legal workings in Missouri.
Imagine that. Crazy legal workings in Missouri. Yes.
Yeah, a lot of weird stuff going on in Missouri from a real estate and legal standpoint. Go ahead and you can hit this.
So Designworks is a lawsuit that came out of Missouri, obviously. And what happened is that broker was listing a property and it had this very unique atrium in it. And so the broker says, you know what, we should probably put together some floor plans. So they hire a third party to come in and put together the floor plans of the house and to showcase, this atrium in particular, because it was very unique. So they go through and do that. And Designworks was the ones that had actually designed this atrium. And Designworks says, wait a minute, that's our intellectual property. You can't have that out there to the public. You can't advertise it without our permission. And they end up suing the brokerage firm based on the fact that they were using these floor plans. District court threw it out and essentially said, no, that's not intellectual property. Designworks appealed and they took it up to the Court of Appeals. It's a federal case. So the Federal Court of Appeals and said, no, you're right. This is actually, this is intellectual property, and Designworks has an intellectual interest in those floor plans. Now you can see the appellate decision, what consequences that has there is because now brokerage firms, if you're doing floor plans, this could mean that you're violating somebody's intellectual property rights. So it has some big implications. Now, it was the fact that it was an atrium, I think that kind of sets this aside because it was a very unique part of the property. But if this appellate court's decision stands, you could see where all of a sudden you have architects and different people that even if you get floor plans from somebody else, you could still somehow be violating somebody else's intellectual property rights.
Yeah, the implications from intellectual property standpoint could be massive and expanding what would theoretically not traditionally be an intellectual property right. It'd be one thing that if they had taken, the original plans that had been designed by or drawn by Designworks and utilize those, I think very clearly there's an intellectual property problem there. But to recreate something, theoretically you could extrapolate it to taking a photograph of the atrium, right? Yeah. If you're now marketing a photograph of the atrium that happens to exist, could that be extrapolated out from an intellectual property standpoint? So this was, I think, found on behalf against Designworks, the architecture firm at the district court level.
Court, yeah.
Appellate court overturned that, and now it's been appealed to the Supreme Court. And so we might get some guidance on this. The biggest takeaway with all of this is, I think, from a brokerage standpoint, and I know we've both talked about this for years, intellectual property is everything anymore. I mean, it really, as we have entered and have fully entered, have jumped into the digital age as an industry, as a society, the value of intellectual property is going to be something that is going to be very hotly contested. And who owns these digital assets is going to continue to be a very important point, particularly as you guys are using images as an example in a digital world where, we mentioned Google, or Nobu had mentioned Google image search, the same resource that you could use to find out where your listing photos are being utilized. Somebody who owns a photographer, or, somebody who owns, an HOA community that owns off of their website a picture of the monument sign for the community, and you right click and save that image as something that you then use in your marketing materials. All that metadata is very easy to identify who's misusing your intellectual property. And again, as that increases in value because of just the digital age that we're living in, you're going to see, I think, a lot more enforcement of that. And so it does come back to, from a cautionary standpoint, make sure you understand the use parameters you have over photographs that you get. And I think a lot of agreements between brokers and their photographers, they include the right for you to use those photographs. It's a license to use them, not the ownership of them in the vast majority of cases. It's a license to use them for the marketing of the property, in some cases during the marketing period. And so even using photographs, 2 years after on your website to say, hey, these are properties that I've sold, examples of property I sold, there's a chance you're violating the original photographer's intellectual property rights in that regard. And I've gotten a lot of calls that photographers are getting a little bit more aggressive about that. And then I also have gotten a lot of calls of people getting demand letters from Getty Images or these big image aggregators that own a lot of images, and sending demand letters, legitimate financial demand letters to brokers saying, hey, we've identified you've been using this on your website or in your marketing material somewhere. And because you're a commercial user, you're using it in a commercial sense, there are actually damages that they can pursue, and they're actually doing that. And so
there's a really good point though. It's like people still think that what you find on Google is free to use, which isn't the case, especially in the form of Getty Images. Those guys are crazy,
very aggressive.
And they target real estate people because we are kind of the nexus of the I want to use it because I find it online.
They aren't going to go after some consumer or somebody at home. What they're going to look at is somebody that is using it in a commercial setting, because that really helps establish those damages. When you guys are using it, you're advertising your services, that's a commercial setting. I'll tell you, the worst one that I've seen was a world-renowned photographer based out of Denver, taking pictures all over the world. One of his pictures is actually in the Library of Congress. I mean, just to give you an idea of so they were suing for $35,000 based on the fact of his work is that important or whatever you want to call it. And they actually put we call a pocket lawsuit with it to say, by the way, we need you to pay this or negotiate or come talk to us. Otherwise, this is what's being filed against you. I mean, it was very, very serious, and more so than even I think Getty Images at times is. But they had every intention of moving forward. Luckily, we were able to resolve that. But you do need to be very aware. I mean, and the damages are substantial. It's not just a couple thousand.
Should you be going to your vendor, photographer, floor plan, drone, or otherwise, and saying, add a release of liability to my contract?
You can ask.
You should at least be looking at the contract and talking about what exactly are those rights. And if they're not sufficient for what you need for your business, then you might need to go find somebody else. I mean, that's the reality.
Yeah, I mean, I think that's the key, is understand what you're agreeing to. And because it's not typically from your photographers. I mean, I hear a lot of there's not even an agreement, right? And in that case, I think without an agreement, the photographer probably just owns those rights. And I don't know what license they're really giving to you. But a lot of photographers that use agreements, that is really what they are. It's just a license. And it sometimes is very, very constrained to the period and the purposes of marketing of the property. And so theoretically, once the property closes, your license to use those photographs can expire. And so understand what's in those. And I get calls all the time from Getty or from brokers who receive Getty Images demand letters. And there's a couple of other big aggregators out there. And they call me and they go, this is a scam, right? Have you heard about this scam? And I'm like, it's not a scam. Like, this is a legitimate demand letter, and you definitely should respond. In most cases, they will work something out with you and settle it out, but it is something that you don't just want to blow off if you get those letters.
This is on the heels of copiers. I mean, a couple of years ago, you're using the wrong copier, and for God's sake, you're getting demand letters.
Yeah,
from the brokerage level. There's one thing that paying your dues to the association is that you do have a legal team locally, state, nationally that's fighting this stuff. So, we got 5 minutes left.
Okay.
And it looks like Eric would love to end this on the selling my house in 40 years.
Good way to end.
Great call.
Good way to end. Good way to end. You go ahead. You can set it up, and I'll chime in.
So we were in a market that was low on inventory, and there was people, and brokerage firms get creative. Brokers get creative. You guys are a very creative bunch. I will give you that.
They're creative and they like acronyms.
Yeah, creative and acronyms. Yes. So one of the things that we're seeing out there, and just so you know, this is nationwide. This is not just something we're seeing in Colorado. Scott has me on a feed for other legal teams in other states. And one of the things that we've seen is that this is something that's coming up all over the country.
Frequently.
But, in order to try and entice people to list with them, what they'll do is they'll say, hey, I'll tell you what, you want some free money, seller? What we'll do is we'll enter into an agreement And let's say that the commission would have been, if we'd sold your house today, your commission would have been $21,000. We will give you like $2,100 for free. All you have to do is sign this agreement and enter and sign this memorandum of, what do they call it? Memorandum of agreement or something like that.
Understanding.
Yeah. And so it's a memorandum of agreement, and it says that you have to use them if you decide to sell your house in the next 40 years.
Yeah.
I'll tell you, there's all sorts of legal issues with this and different problems, but we've definitely seen, I had a broker call me out of Garfield County, a very good broker. And he says, you know, my buyer is buying this property. They happened to be using the brokerage firm that was doing this. And they said, what do we do with this? Because it's not being pulled off title. And I said, go tell them to pull it off. And so they went to the brokerage firm and said, we have to pull this off. And they said, oh yeah, we do that all the time as long as you ask. If you don't ask, then we leave it as an encumbrance against the buyer's property, which would mean that, I guess theoretically, they'd have to use this brokerage firm when they went to sell it again.
Yeah.
Even though they got no benefit, or either it just creates a cloud on title, which, you know, are spurious lien. The other one that I've seen on this was husband and wife went ahead and decided, you know, they took this program, went ahead and decided to sell their home, and they used a different broker. And they ended up selling the property to a buyer. Buyer ends up moving into the property, and all of a sudden they get a demand letter from the brokerage firm's attorney saying this provision in our agreement was violated, and buyer, since it was of record for the title commitment, you are now subject to it too, pay us $21,000. And so, you know, obviously the buyer did not know anything about this. They tried to implicate the title company. Ultimately, I think the seller's the one that probably has liability in it. But it's just, it's a big deal. And from my perspective, I don't know if Scott agrees with this or not, but from my perspective, these things are a problem because we have a rule in Rule 6, Chapter 6, I don't know which rule it is, that essentially says that brokers cannot file a lien against somebody's property in order to secure their commission, which is what this sounds like to me, unless they've gotten a judgment in a court action. So I think there's some problems there with the state level. So this is not go do this because it sounds like a great idea. But you do need to be aware that, you know, maybe having your clients look at those title commitments and making sure that there's not one of these things on there, because you don't want to be stuck with it for the rest of the 40 years.
Yeah, that's, I mean, that's the big takeaway in two ways. One is pulling an O&E when you take a listing. It costs a few bucks maybe to get an O&E as you're taking a listing, and giving
particularly now when we might have other liens against it too.
Yeah, giving a quick perusal to, you know, kind of what's going on with this listing that you're taking, and understanding, seeing if there's something like this that might be encumbering it, or other things that you might not want encumbering it. But great to pull an O&E at the beginning, and great to really encourage your buyers in writing to pay attention to their title commitments, because, you know, Damian's example, at least one of them, that's a pretty hard letter for a buyer to get, that they now have owe money to some brokerage firm that paid their seller $2,100, you know, of free money 6 months or 6 years ago, and they just never knew about it. So be aware that is, I don't want to say it's necessarily a scam. I just think that it's an active business model that is out there, and they are actively licensed and doing business in Colorado, and it is having an impact throughout. So,
but overall, though, you're saying get back to basics. Read stuff.
Yeah.
Encourage your clients to read stuff.
Yeah.
I mean, it's like almost like it's coming back to normal-ish. And also like gimmicky, every time somebody comes up with a gimmicky real estate sales model, a puppy dies, right? Is that what you're saying?
You know, I mean, we've gotten away from, because the market's been so fast, everybody has equity in their properties. But, you know, there was a time where we used to do O&Es on every single property to make sure that we knew what we were up against. And incidentally, if you're doing O&Es, make sure that they're doing a name search, because just an O&E that doesn't include judgment liens or IRS liens or something like that is not
good. For the newer agents on this, what's an O&E?
O&E is ownership and encumbrance report. You can get it from the title company. You know, I think it's usually like $5-10 or something like that. I don't know exactly, but it's not expensive, but it heads off a lot of potential problems down the road. Because if your client, who sometimes they get amnesia about what they owe against their property, and like, oh yeah, I only have one loan and I only owe $200,000, and then you go and you pull an O&E and you find out that they have an IRS lien for another $200,000. That's something you should probably know before you go under contract, because once you go under contract, now your seller has obligations to meet these liens before they close, And if they can't meet the time frame, that puts them in default. And so doing those O&Es when you're first listing the property, at least you can say, wait a minute, what's this? And they say, oh, that's not me. Or they can say, oh yeah, I forgot about that. And it's like, well, we better clear that up before we get under contract, because otherwise we're going to have problems.
Yeah. It also just helps preparing, making sure you got title reflected properly on your listing agreement and on the
Yes.
contract, legal
Yes.
description reflected properly on the agreement and listing. I mean, it's a really handy little tool that's very inexpensive to get a very good comprehensive understanding of everything that's going on with a property that you're listing. And you know, for $5-10, it seems like a pretty good investment.
Totally. Refinancing, HELOCs, all these things that sometimes even sellers forget about.
Yeah.
Yes, absolutely. They
Yeah.
just, oh yeah, I guess I did take out that $200,000. I forgot.
Could be solar encumbrances, could be, you know, I mean, I'm hearing more about doors and windows, people financing doors and windows and having encumbrances placed on those bases. So knowing what you're going to list is important for a whole bunch of reasons, and it's a good, easy way to do it. So.
Yeah, and as we head into a different market, you can see where people have more and more chances of being underwater or having those things against it that may not have had them in the past. So at this time, it's probably time to start.
Good stuff. Well, hey, that's it for us over here. Hi, this is my top of my head here. Julie, back to you guys.
Thanks, guys.
Thank you.
All right. Thank you so much, Scott and Damian. Such a wealth of knowledge. And I know everybody here got a lot out of this. So thank you so much for your time today. I want to thank Greg Mattern again with Finance of America Mortgage for helping us put on the events that we do. And Matthew Hay with our annual partner, Chase. Thank you again for helping us. And you can find their information in the chat if you all still need to get in touch with them. Real quick, I wanted to point out a couple of events we have coming up on Tuesday, June 21st from 9 to 10:30. We've got our Meet and Mastermind called Pivot, Adapt, and Thrive. And as we heard, and as we know, the market is changing and shifting. So we are going to have two of our top producing agents, Diane Ortiz, the CEO and realtor at Ramingo, and Piper Knoll, realtor at Madison and Company. And they're going to share their best tips for moving with the market, advocating for your clients, preparing the market shift, and building a business that stands the test of time. This is a free event, guys, for all of our DMAR members, and we hope that you will join us, both industry partners and realtors. And Melanie has put the link so that you can get your registrations. That's all we ask, is that you register so we know that you're coming. And then again on Thursday, June 23rd, this is next week, from 9 to 1, the new Development Insider. I know you're still looking for inventory. We've got it at this event. This is our annual showcase of new developments across the Denver metro area. It includes luxury condos, custom single family homes. We've got an architect, everything in between that you can think of. We've got it at this event. This year, we're going to be at Empower Field, and we will have a nice continental breakfast for you, and hope that you will join us. And Melanie again has put that link in the chat for you to reference if you'd like to join us. The tickets are $35, and you'll get that beautiful New Development Insider booklet, if any of you have joined us before, which is something that you can share with your clients when you're helping them find inventory in this market. Before we go, if you would like to hang on, we are here. If you'd like to do a little bit of networking, we will hang on the line. We'll keep the Zoom open, and please do join us. We'll give you a few minutes. Thanks again for joining us.
Did you ask us a question?
I didn't ask. Do you have anybody want to ask a question?
We're talking about lawyer stuff.
Advance that last slide. See if you can advance it one more.
Oh my God. Why do you do this to me every single time?
That's
What is
Damian
it?
on a rocker.
Damian, keep your day job.
Yeah.
I don't think the Olympics or anything is it's in store for you. Anybody have some questions or a question while we're hanging on, or comments about what's going on?
Hey, I have a question. I'm just kind of waiting for things to pat down.
Hey, Sally Kate, how are you?
I'm good, Julie. How are you?
I'm good, thanks. What you got?
Good. I have a question for Scott and Damian.
Go ahead.
So would you guys consider doing an intellectual property discussion, just like an hour of that? Because I feel like we could spend a lot of time on that.
Oh, because I know so much about, I mean, I know enough to be dangerous and that's about it.
Yeah, it's a very specialized area of law. I mean, maybe let us coordinate with Julie and see if we can do a connect a few months down the road, give us a little bit of time to come up with some issues. If you have specific questions, I mean, we're happy to try and give you some guidance, but intellectual property, you know, that most attorneys are members of the patent bar. And that means they're really smart, because the only way they were even eligible to join the patent bar is if they have like a engineering or science undergraduate degree. And I avoided that my entire life, which is why I became a lawyer, because I can't do math or engineering or science. But yeah, it's happy to try and come up with some information or have a discussion that is more focused on intellectual property.
I think this Designworks lawsuit, even though the MLS and the NARs don't think it's got a lot of legs, I think will predicate a lot, though, right? In terms of
I think NAR filed an amicus brief in that in the Supreme Court, or for the Supreme Court on that one. So hopefully it goes away, but it's still, I mean, it still has some basic things in it that you got to watch out for.
Yeah, Sally Kate might want to wait for that court case to kind of shake itself out, because I think that's going to be some precedent setting stuff either way. But we'll be watching that closely, because it really is causing folks like these guys and the MLS world a lot of heartburn.
Well, and I'm thinking more about not those kind of broad cases, but more on an everyday realtor level, like what can I use in Canva? What kind of pictures can I use? If I ask the agent, can I use her listing pictures for just sold postcards? Does that violate IP law? You know, really simple things. I'm not looking for high level stuff. I'm looking for really specific stuff about using listing pictures.
Well, you bring up a good point, like Canva. The reason why, like, I don't know anyone who pays for Canva, but the people that do are getting access to photos and music that are license free, right? So because you signed up, you can use it. And now there's a cottage industry being set up around that. I talked to a dozen technology vendors over the course of a year that all they do is specialize in this stuff for the real estate industry. So you got a cottage industry kind of being set up for that. But I think the big thing is, if you find it on the MLS, you don't have permission to use it. You find it on Google, you don't have permission to use it. Stop using the things that you see online, which is that's like 99% of the issues out there right now with most realtors.
And sometimes they'll say, oh, you have a license to use this, but it might be limited to just being as a consumer. And once you take it over into commercial, that license doesn't count. So you got to pay attention to what that license actually says. Yeah,
the whole right-click save as thing is deadly. Just because it ends up on your desktop as something you can manipulate doesn't mean that you have a right to it. But you asked, an element of your question triggered something that I think is important, is that if you're a broker and you have another broker asking if they can use your photographs of your listing for this, that, or the other thing, unless you took that photograph yourself, there's a really good chance you don't even have the right to authorize that other broker to use that photograph. And that's the problem, is the devil is in the details in each individual situation with regard to who the intellectual property resides with. In most cases, in fact, I would say 90+% of the cases where you're having a third-party photographer take photographs and you're hiring them to photograph your listing for you, you do not own those photos. They do. It's very rare that photographers give up the actual intellectual property ownership of their photographs. Some of them might be willing to, and some of them might be pretty liberal with their permissions with regard to who can and how you can use them. But even you're even risking, by authorizing another broker to use one of your listing photos in a way that is inconsistent with your agreement with the photographer, could be problematic for both you and the broker who's using those photos.
Yeah, so somebody's asking, so how can the photos be syndicated from MLS to brokers? Because the photographer doesn't own it anymore. The MLS owns it. That's how it gets to the other sites.
Yes and no. I don't know that the MLS tries to own it. And I think I think our industry, our real estate photography industry, probably overlooks the fact that they might have some issues with the way syndication is performed. Just because MLS puts, a water stamp or what do you call it? A watermark on it that says, this belongs to the MLS. I don't know that actually in an effective way converts the ownership in that regard. But I mean, imagine a real estate photographer who said, you're not allowed to syndicate any of my photos that I take of your property. They're not going to be in business for more than a day or two.
Yeah. One of them sued a portal.
Yeah.
So, yeah.
So, but it's a tenuous proposition, but just in terms of the broad use of photos, it's becoming an increasing problem because of the value and identified value of digital assets, and that's not going away.
Yeah, and you really ought to make sure that you're checking with your photographer. I mean, I can't stress enough that you need to know what that agreement actually says, because you're the one that's going to be the one that gets, so MLS gets sued over the fact that you shouldn't be using this photo. They're going to go back to their MLS agreement about who uploaded it and said that we actually did have rights in it. And that's going to be the broker. So you really, really have to understand those agreements.
You guys want to go down the DOJ lawsuit rabbit hole?
That was my next thing. What's going on with the DOJ, and is there an update there?
Well, that's him.
Yeah, so a lot of things going on. It's not the DOJ lawsuit. There's two different kind of categories of things. There are federal class action lawsuits that are pending. There's really two at this point because the buyer lawsuit was dismissed about a month ago, fortunately. But there's what we call Morrill and Sitzer. They're the two different matters. One's in Illinois, one's in Missouri. Another thing going on in Missouri, the lawsuit going on in Missouri. Sitzer has been certified as a class. And so they will now begin identifying class members and moving forward with things. I think it's probably reasonable to expect that Morrill will be certified at some point in the coming months as a class as well. And so those will continue moving forward. The very basics or overview is, sellers are essentially alleging that our industry has caused them harm for a number of years. In this case, both classes would begin in 2016. But for many years, even prior to that, because of collusionary behavior related to cooperating commissions. And that they have been forced because of NAR's MLS policies of having a mandatory offer of compensation embedded in MLS. They've been forced, sellers have been forced to pay what is an inflated commission to buyer agents. And please, I can't really see the chat, but please, nobody put in any numbers. I don't want to see any of that stuff or hear any of that stuff in questions. Those are going on and we'll be moving forward. And we're talking about a litigation horizon that's probably a minimum of 8 to 10, maybe 12 years before we get resolution to those, because NAR has said explicitly that, this is a fight that they're going to have, and they're going to have it until the end. And so they will, I assume, fully litigate. Then there's the DOJ, and FTC has also been added to an investigation. Those aren't lawsuits. Those are federal investigations by those two federal agencies with regard to our industry. And we're in a wait and see place right now. Unlike lawsuits that, where there's pleadings filed, responses filed, lots of transparency and public information there. When the DOJ commences a federal lawsuit, a federal investigation, as well as the FTC, who's involved on more of a civil side, they are not as transparent. They don't have to be. And so what ends up happening is they've said, we'll be back in touch. And that's really where we've been for almost exactly 1 year. It's almost July 1st. And it was July 1st of last year that the Biden administration withdrew from the settlement that had been reached with the Trump administration's Department of Justice, and basically told NAR, this is no longer good. We're going to recommence a brand new investigation of our own with our own DOJ. That's when they added the FTC to the mix. And that's what has been going on for the last year. And there has not been, to my knowledge, I couldn't tell you whether there's been discussions between either of those agencies and NAR to try and seek settlement in the last year. But I can tell you that from a public standpoint, there's no additional information that they've given. In the meantime, NAR turned around, and interestingly, and I was actually very impressed that NAR turned around and sued the Department of Justice. And so that's currently pending as well. And NAR's premise there has nothing to do with antitrust or the merits of the suit, but they basically said, and I think this is a really important point, that citizens, United States citizens, United States corporations, United States entities ought to be able to rely on the freely negotiated agreements between the individual or corporation and an agency of the federal government, and that those agreements that have been fully negotiated shouldn't just be able to be sort of upended in whole by a subsequent administration or somebody else who comes along from a political standpoint afterwards. And so it's kind of an interesting lawsuit as well. And that was filed last, I think, October or November, and that's kind of pending or kicking around in federal district court too. So a lot going on in that area. The biggest thing I would tell you guys to take away is that our industry needs to do a better job of talking about
your value proposition.
Yeah, your value, particularly buyer agents, are going to get challenged, I think, if things change in the cooperating commission realm. Your value proposition is, you're going to need to lead with that. And it's, for me, years, it hasn't just been, well, I have access to the MLS, right? Because the data is out there, it's available, everybody has that. So what your value proposition is going to have to be refined and articulated and sold in a very different way, I think, going forward. But what I was also going to say is that we have to do better as an industry in how we discuss commissions and how we refer to things like market commissions and, oh, this is a standard fee or this is a discount fee or whatever, because if we start with the premise, as it has always been, that there's no such thing as a mandatory minimum offer of compensation, then there really is no such thing as a market commission. There's no such thing as a discount commission, and so forth. And our industry's been lackadaisical, I think, for many years in some ways, referring to commissions. So keep that in mind as you're engaging with your colleagues and competitors across the marketplaces.
Thank you.
I can't see the chat. Nobu left, but I don't know if there's more questions or if there's anything else people want. We can't really see what's going on there.
I think that's it, guys. And we've hit the 10:30 mark. So in interest of your time, I know you're busy solving all the real estate issues.
Yeah, I'm going to go play golf or something.
Yeah,
probably.
I'm sure he's not going to do anything.
Damian's going to go build clients.
I'm going to go ride around in Nobu's golf cart and listen to crazy music. I know you.
There you go.
Yeah.
Yeah.
Well, thank you
Nobu
guys
likes
so
punk
much.
rock. Go figure. Thank you, guys.
All right. Thank you all. Thanks, everybody, for joining us today. Thank you, Scott and Damian. Appreciate it.
Anytime.
Take care.
Bye.